the 13.3 facilities, the CARES Act appropriates, if I recall correctly, $500 billion to be utilized through the Exchange Stabilization Fund to help facilitate the implementation of these Section 13.3 facilities by the Federal Reserve. Most of that has not yet played out, correctly? Am I correct?
So there's of the 500 billion, approximately 50 billion was in direct lending programs from the Treasury, and 450 billion was available for the 13.3 facilities. I've allocated about half of that, and let me be clear, I am prepared to allocate the rest of that. The only reason I have not allocated it fully is we are just starting to get these facilities up and running. We want to have a better idea as to which one of the facilities needs more capital, as well as the potential for adding additional facilities. So I expect to allocate all the capital as needed, as was given to us.
And so that the listening public can be clear about this, the way these facilities work is once the money is allocated, as you've just indicated, to a particular facility, and the Fed implements that facility, then that money can actually be leveraged into much greater amounts of liquidity for whatever market or situation that is addressed, correctly? Is that correct?
That is correct. Depending upon the credit risk, it depends on the leverage. We've allocated with the existing capital up to about 2.3 trillion in existing facilities. And Mr. Chairman, let me just make a comment, because I know there's been a lot of questions as to whether the Treasury is willing to take risk with that. I would say the answer is absolutely yes. The way these facilities work is in the facilities that don't have any credit risk, such as the PPP, I approve those without capital allocated. By definition, any facility that the Fed believes puts them at risk, I do put up capital. So by definition, that capital is at risk, and we are fully prepared to take losses in certain scenarios on that capital.